Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we check the Crown tax surplus for the first 3 months to the end of September, look at the withholding tax collected on interest earnings, update the latest term deposit rate changes, and we'll wrap up with a look at what the other media are reporting. The party faithful cheered when the Prime Minister announced over the weekend that they would deliver tax cuts. Ironically, they cheered like the National Party faithful. Overtaxing has been the order of the day for many years now, and after the chewing gum cuts of a few years ago were flagged, it has now gotten to the point where they can't be avoided politically. And the tax surplus for the first 3 months of this budget year has come in at $2.1 billion, well ahead of last year's pace. Just so we're clear about the level of overtaxation in the past 8 years, the term so far of this government, they've amounted to in excess of $40 billion. I doubt when they're announced that any of that will be included in tax reductions. And don't forget, that $40 billion is not the spending, that's the excess collected over and above the actual spending. And state spending is hardly being restrained. Core Crown expenses grew almost 10% over the same period in 2006, with the biggest increases in social welfare and health. Taxes collected on interest earned are rising at a record pace. They are 17% ahead of the same 3 months last year. They're also millions ahead of the government's own forecasts. In actual fact, none of this money collected was required to balance the government's books. The almost $600 million collected as withholding tax on interest in the first quarter was less than 30% of the operating surplus for that period. Interestingly, it was about the same amount that the first quarter overall surplus exceeded their whole budget forecast. Today, ANZ has announced a one-year term deposit special of 8.9%. This now becomes the best benchmark, substantially raising the bar. It is a significant move. Given that CPI inflation is only 1.8%, that means investors are being offered a real rate of return of over 7%, itself a high watermark. Such rates are extremely attractive. These fixed interest returns challenge many other types of investment returns in the New Zealand market. Managed funds especially will have significant trouble matching this ANZ offer, especially after fund fees are deducted. And these days, property investment will struggle to justify the risks and illiquidity those types of investments offer. Share market returns may as well. Such high returns will also threaten non-bank financial institution offers. There have been a number of sharp moves higher in offers from finance companies in the past week, with many more moving over the 10% threshold. But with this latest offer by ANZ substantially raising the benchmark rate, no finance company could now justify a debenture rate below 10%. Troubled Property Finance Group is seeking approval to restructure. It said it's confident to get the approval of investors for a plan aimed at removing its trading arm from receivership. Lombard Financial Services Director and Chief Executive Michael Reeves should know this week whether his conviction for a Securities Act breach will stick. The Consumers Institute has said it is concerned at the lack of information for investors provided by Geneva Finance ahead of its meeting today. The Institute has been denied representation at the meeting on behalf of investors unable to attend. $1.3 billion of Eurobonds were launched in October, slightly more than in the previous 3 months. However, this was well short of the record $3.9 billion of maturities for the month. The bulk of the shortfall was in Eurodashity bonds. Recent market volatility and the new Know Your Client investment laws in Japan apparently have slowed Japanese demand for high-yield currencies, albeit temporarily. Maturities remain heavy in coming months, with another $7.9 billion due for redemption between now and March 2008. You can get more news and start with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.